Hello friends, Vladimir here with you, and this is the weekly review for 14th of November 2011. Well, Friday is supposed to be volumeless as French, US and Canada were all in a bank holiday day. But despite of that, all the majors actually made the move. The reason was the new government that looks like going to be built in Italy. Well, with all the last positive news from Greece, Italy, well, actually the whole Europe, the market has its optimism. Well, let's take a look on the chart and try to see the best opportunities we might have for the upcoming week. First of all, let's take a look on the pound dollar. Very interesting pair. And let's see what we have here. We might have something interesting for a bullish move. What do I mean? Take a look here. We had 1, 2, 3 right now. It looks like we had 4 as a correction, and now it looks like we are building the 5. If it's correct and MACD is going up, it means we are going to have well, most likely a move that will take us for one of the next very serious areas, or this one or just the next one. So around the 162.50 or just around the 164, even a little higher. I do believe that if it breaks and successfully makes the close above the 161 successfully, it should easily go to 162.50 easily. And the one thing we will have to look for is this beginning of divergence. It looks like it's going to be just a question of time until the British pound will make another down move. So a close above 161, and I expect a move for 162.50 or even 164 or even higher, as long as we have this divergence being created. Once the divergence will be completed, it could happen here or higher with some bearish daily candle patterns and another slope down of the MACD histogram with 2 lower highs, we will begin to attack the down move, and the next down move might be much stronger, much longer than this correction we have had. So stay tuned, as it might be very interesting pair to follow. Another interesting pair to follow will be pound against New Zealandian. It looks like on daily chart we have here some of divergence. Well, it's not classic, it's definitely not classic, right? But divergence it still is. So it might be something like that. It might make a rise or double top or a rise to 207 or 208, 209, that's the area, and to continue this divergence and make the down move. How I suggest to join this possible down move, just with small leverage based on investor style, with no leverage at the beginning, negative leverage, and then add positions 207 to 850, and based on 4-hour chart. As you can see, based on 4-hour charts, we might have something like that, right? Here we might have a continuing long run divergence that will make some move and begin serious down move from higher highs. So just stay tuned for this pair, as I believe that the last rises are very last. A break below this trend line, by the way, will open the gates for much stronger down move. So 2 scenarios for pound New Zealandian: a rise and divergence around 207 or 208, 209, that's the area, and a down move, or just a break through this line and much lower lows. I do expect 202 to be reached, or even lower around the 201 at least. Of course it might be lower. That's a good pair to follow. Another interesting pair from my point of view is the Aussie against the Kiwi, and I recommend to start attack this pair for a sell. It might be a possible head and shoulders here, long head and shoulders, which might be shown on daily chart. Shoulder, head, shoulder, and a down move, or if it breaks through up, it might go and create for us here another leg for divergence, and will give us a possible beautiful sell from around the 132. Believe it or not, the spikes area, as you can see, right, just through here, bring us almost also to this area, 132, or if it breaks through, then the 133.50. From my point of view, it might be this higher. The spike area will be the last areas for this pair before we got a serious down move, which will, from my point of view, take us back to 128. So AUDJPY as another pair from my point of view to start attacking the down move. Well, let's see another interesting pairs we might have. Let's take a look on the dollar yen. The bearish trend is clear, right? Is very, very, very clear. But we should not forget the intervention from the central bank. And even though that the weekly chart finished bearish, we still have some bullish slope of the MACD, and it's still positive. As long as the daily chart holds the 20 MA and this support area, as you can see, right, all this area around the 77, well, 10, 20, that's the area. As long as the daily chart holds it, we still might see dollar yen retracing full all way back. So just stay tuned for this area. If it closes daily chart below, it will most likely take us all the way down again. That's my story for the dollar yen. And if it makes successfully the move, I expect the dollar yen to go to 80 area at least, and of course it might be much, much higher. The 77, 10, 20 is the most critical area from my point of view. Another beautiful pair to watch from my point of view is the euro against the pound. Once it broke down just right here and did a close, right, from my point of view, it should go lower based on the investor trend and expectations that euro pound should go much lower. How lower? Well, as long as it will be below the 20 MA of the daily chart, I do expect it to go down. How down? Well, I believe we're going for this support area at least around the 083.50, but actually I do expect it to reach the 081 or even 080, this stiff support area again. Yes, I think it's going to take some time, but as long as it keeps being below the daily 20 MA, I think it's going to have a bearish trend. So that's my expectations. How to join? You can go for higher time frames and look for possible divergence. If the euro pound makes the rise and continue here the divergence, it might be an area just to re-attack it again for the sell. That's my expectations for euro against the pound. About the Australian dollar, for example, my recommendation, stay out. I don't really understand this pair, as it is zigzagging between the Bollinger Bands right now. Based on a weekly chart, it is zigzagging around the 20 MA, so I just recommend stay out of this pair. It's not clear, don't jump to be in. Anyway, we still have kind of clear area here to reach, and from other side we have here this trend line to break before we can talk for a long run. So my recommendation, stay out. And our favorite euro dollar, well, as long as it will be below this trend line and at least below the daily 20 MA, I am sideway for the euro dollar. Nothing clear here. I prefer to stay out. Euro dollar might make this trick as the Aussie dollar might make the up move and to continue this divergence before it make another drop down. The expectations from Italy and Greece and all other countries in Europe for positive news are very strong. But let's see, as it looks for the last period, each day they change their mind, right? Once they're positive, once they're negative, and the market does not following so quiet the news there. It really makes strong moves. The gold is another one from my point of view to watch for a sell based on daily chart. I do love these rises, but I do believe they are going to end soon. This is a beginning of continuing divergence, as you can see. So as long as we have the right, well, somewhere around the, I would say around the 1820, maybe even a little higher, but this continuing divergence should keep. Once we will reach one of the next resistances areas, important areas, then it will be very beautiful area to start and sell the gold. I do believe that these rises are very limited, and if you watch the weekly chart, that's what we might have, a double top for a serious crash down, or just reaching the spikes area as we discussed and begin the turnaround. And this turnaround, friends, might take us all the way down again below the 1600s or even below the 1500s, who knows. So let's follow the gold, as from my point of view it's just a question of time until we are going to reach the trend line, the weekly most famous trend line in the market again. That's my expectations for the gold. And that's actually all. Well, let's take a look on the indices. That's the S&P 500. What would you say, friends? It keeps being just in some sideways moves, right? If it makes successfully break up, then yes, I will expect it to reach the 1300s again, or who knows, maybe even higher for the last high around the 1350. Who knows? But I expect it to be the last up move, as the divergence will make the change. Where exactly? Time will tell us, but get ready. This up move will be, well, I believe, fake. And are we going to have a rally for the end of the year? Very possible, very most likely, especially after the positive news from Europe. But I believe that it's all going to change, maybe even at the end of this month, until Obama will have to point his, actually to vote for his reducing or cut the debt program. It's going to be interesting period. These divergences are going to provide some great stuff. So thank you very much for watching this video, and I wish you a beautiful week with a lot of pips. Once again, I would like, there are just few spots left on the seminar in Hungary that will be held in 26, 27 this month in Hungary. You can watch my last post on the blog about it, and if you wish to come and meet me personally, just register and I'll be there to meet you. So we're going to have some great time. So once again, friends, thank you very much for watching this video, and I wish you beautiful green pips week. Yours, Vladimir. Bye bye.